Kenya pension industry reaches 2.8 trillion, creating new footing for economic growth. Today, welcome to East African Business Report. You trust source of latest business investment economic news for East African. Today, top story came from Kenya, where the country pension industry has reached a major milestone. Total pension assets have grown to approximately 2.81 trillion, highlighting increasing strength of Kenyan retirement savings sector is growing important for national economy. The experts believe this fund could be one of the most important powerful source of long-term investment supporting infrastructure, affordable housing, manufacturing, and industrial expansion while reducing reliance on foreign borrowing. Let's take a closer look. The Kenyan pension industry continues to grow. Kenya's pension sector has experienced steady growth over the past several years as more employers and employers continue to retirement savings. The strong investment performance and increasing participation have helped expand the industry total assets to around 2.81 trillion. This milestone demonstrates increasing confidence in Kenyan retirement savings system and reflects broader investment in the country's financial sector. As the pension fund continues to grow, they are became one of the largest pool of long-term domestic capital for affordable investment. Unlike short-term bank deposits, pension savings are invested over many years, making them well suited to financial projects that require patient and long-term funding. Why this matter? Economic analysts say the growing pension industry is not only good for retirees but also for Kenya's future economic development. Large pension funds can provide suitable financial products that may take many years to generate returns. And instead of depending mainly on external loans, government and private companies are increasingly rely on domestic investment to finance development projects. This approach strengthens financial independence while reducing exposure to exchange rate risk and global financial uncertainties. Supporting infrastructure development. One of the biggest opportunities lies in infrastructure investment. Kenya continues to invest heavily in roads, railways, airports, energy generation, water system, and digital infrastructure. These projects require billions of shillings in financial over long periods. Because the pension fund invests with long-term objects, they are considered suitable investors for infrastructure projects that produce stable income over many years. Improve transportation network, reduce business costs, improve trade efficiency, increasing regional competitiveness. Better infrastructure also attract foreign investors looking for reliable logistics and more resilient environment. Affordable housing could benefit. The expanding pension industry could also help addressing Kenyan housing shortage. Affordable housing remains one of the country's major development priorities. Large pension fund could finance residential development for that provide quality homes for middle income and lower income families. This investment may generate constant return while supporting urban development and improving living standards. The construction of new housing projects would also stimulate demand for cement, steel, construction material, energy, engineering services, and skilled labor. This creates employment opportunities throughout the economy. Manufacturing industrial expansion. Manufacturing is another sector expected to benefit from great local investment. Many businesses require affordable long-term financing to expand factories, purchase more equipment, improving production capacity. Access to domestic investment can reduce borrowing costs and encourage companies to increase production. Industrial expansion to create jobs, increasing export, strengthening Kenya's position as one of East Africa's leading manufacturing economies. Growing industry also supports small businesses that supply goods and services to large manufacturers. Reduce dependency on foreign financing. Economists say increasing domestic investment is also another important advantage. Countries that rely heavily on foreign borrowing often face challenges when global interest rates rise or exchange rate fluctuate. By mobilizing local savings through pension funds, the Kenya can finance a great share for its development and using domestic resources. This reduces financial risk while strengthening national economic resilience. At a strong domestic investment base also improve investor confidence because it demonstrates a country's ability to support its own long-term development. Benefit for financial market. The large pension industry also contributes to strong financial market. Pension fund invest in government security, corporate bonds, listed company, infrastructure funds, and other financial instruments. This participation increases market liquidity and provide business with additional source of financing, while the global capital market encourage entrepreneurship, innovation in the private sector growth. As more companies gain access to investment capital, they can expand operations that create additional employment opportunities. Opportunity across East Africa. Kenya expanding pension industry can also generate positive effects throughout of East Africa. After regional economic integration, communities strong investment in institutions, Kenya may encourage greater cross-border investment in business partnership, improve infrastructure support, trade with neighboring countries, including Ethiopia, Uganda, Tanzania, Rwanda, Burundi, South Sudan, and other democratic Republic of Congo. Regional infrastructure, logistic companies, and financial institutions, exporters may all benefit from improving connectivity and strong economic growth. Challenge remains. Despite the positive outlook, experts know that pension fund managers must continue balancing investment portion with their responsibility to protect contributor savings. The investment decision should prioritize diversification, sound governance, transparency, and effective risk management. Economic uncertainty, inflation, changing market conditions require careful planning to ensure retirement saving remains secure while generating sustainable returns. Maintaining public confidence in pension system will remain essential for continued growth. Financial analysts believe Kenya pension industry is entering a new phase of development, and as it continues to increase, pension fund may become one of the country's most important sources of financing for infrastructure, housing, manufacturing, renewable energy, technology, other strategic sectors. If managed pursuits, this long-term investment could also accelerate economic growth, create thousands of jobs, strengthen local industry, and improve living standard for millions of Kenyans. Kenya pension industry reaching 2.8 trillion represent more than just growing in retirement savings. It reflects country expanding financial capacity, potential to finance long-term national government using logistics resources. This coming year will how effective these funds are invested to support infrastructure, housing, manufacturing, and sustainable economic growth across Kenya and the wide East Africa region. Thank you for watching East Africa Business Report. If you enjoyed this business update, please like, subscribe, or turn on notifications so you never miss a latest business, investment, economic news from East Africa. Until next time, thank you for watching.